Imagine two people are coming to your company. One is there to help you improve, giving advice and pointing out areas for growth.
And the other? Well, they're the judge, deciding if you pass or fail based on specific standards. Both are called auditors, but their roles are worlds apart.
Exactly. Today, we're breaking down the difference between internal and external audits in the simplest way possible.
So, what exactly is an audit? Think of it as a systematic checkup. Are processes being followed correctly? Are we meeting all the necessary rules and regulations? Are our risks under control? Is the whole system actually effective?
It's like a health screening for your company. The real difference? Who's holding the clipboard? That who determines the purpose and impact of the audit itself.
Let's dive in. First up, internal audits.
Let's dive into internal audits. Think of it as a company health checkup. It's all about improving your systems from within.
Exactly. Internal audits are conducted by or on behalf of your organization. It's about finding those gaps before they become bigger problems.
So what's the purpose? Simple. Find gaps, improve processes, prevent problems, and get ready for that external audit. It's not about punishing anyone.
Who does these audits? You've got your internal trained auditors, maybe a consultant, or even staff from another department. The key is independence. You can't audit your own work.
How often? Usually once or twice a year, depending on your audit program. What do you get out of it? Observations, nonconformities, and opportunities for improvement.
And the most important part, the company must take corrective actions. No audit is useful if you ignore the results. So internal audit equals action.
Let's zoom in on external audits. Think of them as the official stamp, conducted by a certification body to verify you're meeting ISO or other standards. It's pass or fail.
Exactly. The purpose is to verify compliance, check the system's effectiveness, and ultimately decide if you get certified. Your business reputation is on the line here.
And who's doing the checking? Completely independent third-party auditors from accredited certification bodies. They're not there to help you improve, but to give an unbiased assessment.
The frequency is pretty structured. You'll usually have a Stage 1 and Stage 2 audit initially, then annual surveillance audits, and every 3 years, it's time for recertification.
As for the output, it's pretty clear. You get certification, or you might get a major nonconformity, which is bad. A minor nonconformity requires correction, and sometimes you'll get a follow-up audit to check if you fixed things. These findings can impact your certification status. Let's recap the key differences. Think of it as a simple table.
Okay, internal audit versus external audit. Bring it on.
First, purpose. Internal audit, it's all about improvement. External audit, purely for certification.
Got it. So who's doing the checking?
Internal audits use internal staff or consultants. External, a certification body.
Makes sense. What's the focus?
Internal looks for gaps early to fix them. External focuses on standard compliance. It's pass or fail.
Sounds like the risk is higher with external audits.
Exactly. Low business impact if you mess up an internal audit. High impact if you fail the external one.
And frequency?
Flexible for internal, you set the schedule. External, a fixed schedule defined by the standard.
Final difference?
Result. Internal audit leads to corrective action. External, a certificate decision. You either get certified or you don't. Let's picture this, a food factory. During an internal audit, they miss that the temperature monitoring wasn't being properly recorded. Luckily, they catch it themselves and fix it.
Okay, so far so good. Crisis averted, right?
Exactly. Now, imagine the external audit rolls around and they find the same temperature issue. This isn't just a slap on the wrist.
Uh-oh, what happens then?
This could lead to a major nonconformity. Suddenly, their certification is at risk. It's like the internal audit was a warning system, a chance to fix things before the big consequences hit. The cost of prevention is always less than the cost of failure. So, why exactly are both internal and external audits so important?
Think of internal audits as preventative medicine. They help you catch small issues before they become big problems, boosting efficiency and seriously reducing the stress of an external audit. For example, regularly checking equipment calibration can avoid costly production errors down the line.
That makes sense. So what does the external audit bring to the table?
External audits bring credibility. A successful external audit resulting in certification is often required for doing business and builds customer trust. It validates that your systems meet recognized standards. Think of it like a stamp of approval.
So internal audits are about improvement, and external audits are about validation.
Exactly. Internal audits improve your systems, while external audits validate them, and both are essential for a successful, trustworthy business.
Okay, let's talk about a common pitfall: only prepping for the external audit. This is a recipe for stress and potentially failure.
Exactly. It's like cramming for a final exam without attending class all semester. The internal audit is your chance to find those little problems before they become big headaches.
Think of it this way: a strong internal audit makes the external audit almost easy. It's about building a solid foundation of compliance from the inside out.
Right. Internal audit is the practice match. You get to identify weaknesses, adjust your strategy, and improve your game.
While the external audit is the final exam. It's showtime, and if you skip the practice, you might not like the result. The pressure is on, and every little error counts.
So invest in your internal audit. It's not just about ticking boxes, but really understanding and improving your systems. That way, when the external auditor comes knocking, you'll be ready to shine.
All right, let's talk audits. Simply put, an audit is a systematic check.
Like a checklist for your business?
Exactly. Are processes being followed? Are rules being met? Are risks being controlled? Is the entire system effective? It's like a health scan for your company's operations.
Okay, so it's a broad overview.
It is, but the real difference lies in who is doing the checking. An internal audit is from within to improve, whereas an external audit is from an accredited body to check compliances of ISO standards.
So it's like having a practice test versus the real exam. Both tests cover similar material, but the source makes all the difference.
Precisely. And that difference in the who dramatically changes the why and the how, which we'll get into next. So who exactly performs this internal audit we keep talking about?
Great question. It can be a few different people, really. You might have an internal, trained auditor, someone within the company whose job it is to conduct these checks.
Okay, that makes sense. Someone dedicated to the task.
Exactly. Or sometimes companies bring in a consultant, an external expert with a fresh perspective.
A consultant, like a hired gun for audits.
In a way, yes, they bring specialized knowledge, but it could also be staff from another department. The key here, Alex, is independence. Whoever does the audit must be independent of the area they're auditing.
Ah, so you can't have the marketing team auditing itself. No bias allowed.
Precisely. You want someone objective to really find those gaps and improvement opportunities. Think of it like having a referee in a game. They cannot be on either of the teams.
So who exactly are these external auditors?
They're third-party auditors from accredited certification bodies. Think of it like this. These bodies are the referees of the standards world.
Okay, so they're totally independent.
Exactly. They can't have any connection to your company. Their job is to provide an unbiased assessment. They come in, assess if you meet the standard, and decide whether you get or keep your certification. That certification is a huge deal for business reputation and customer trust.
And where can our listeners learn more?
If you want simple explanations on ISO, audits, food safety, and compliance, subscribe to CertSure Consultancy and make standards easy to understand.